Good morning. Just wanted to recap my week last week and go over today. So I made 4 trades last week, and unfortunately I lost them all, but I still don't think the P&L tells the story. So my first loss, and I'm just going to go over them super quickly, was CTNT on a morning gap and crap reversal. This is a 10-minute chart. I was buying it around this area. I essentially bought at kind of towards the high of this candle here, 688, which was a bad entry. And then I got shaken out because I got shaken out on the low wick here when it technically broke the support line by only a second or two. But I won't go too deep into it, but I was talking about how a bad entry led to psychological problems, because typically I'm pretty patient with my support levels, but when I have a bad entry, I become super unflexible and super tight on my risk, because once it hits, I'm so far away from support that once it breaks support, even for a split second, I get nervous, I get out. And unfortunately, I got shaken out, and then this thing ran. Could have been a solid 20% gain, literally, if I just held for an extra second or if I had a better entry. So the main point with this one is 2 things. 1, entry is everything, and 2, I think I'm going to switch to longer time frames, 10, 15, 5-minute, because I recognize that the 1-minute chart is just kind of difficult, and while you could get really good entries, it's just really difficult. I don't have the 1-minute chart up here, but it's really difficult. And when I was studying the charts, I was seeing that, like, even on the 15 or 10-minute chart, I could get very similar entries, and in my opinion, have way more conviction. And I don't like the minute chart to begin with. I feel like it's very fakey. I just feel like it's a little bit too much, and I kind of want to weed out all the BS. So I am transitioning into longer time frames, I think. And of course I want to use them all, but I just want to weed out the BS, and I feel like I could get similar entries with more conviction on the longer time frame. So that was a loss, but which should have been a win. My other loss was SRM, trying to play an afternoon breakout. And you know what's funny is this is another good example of using the longer time frame. So on the minute chart, this is SRM, and I was trying to play an afternoon breakout. And on the minute chart, you see this like consolidation here, perk, and then a higher low. And I played this higher low, and then I ended up getting out. And typically this isn't like my formation for an afternoon breakout. It was a little bit too far away from pre-market highs. Typically what I would want is for like this to consolidate and then make a higher low, not break down even more. But you could see on the 1-minute chart, it looks kind of clear, right? It has this kind of nice little consolidation at support, kind of perks up right around the right time, around 130, makes a higher low, and then it failed, right? But then if you just look at the 5-minute, sure, it has this perk, but then it never really a higher low, I guess, other than here. But I probably wouldn't have played this. So again, it just kind of weeds out all the BS. But the more important lesson from this one was that we haven't seen afternoon plays in play. And I talked about in my past few videos that I feel like the pattern being in play is so important. It's so important, because if the pattern's not in play, you're essentially just playing small picture price action, which is what I did here. I essentially was like, oh, there's a stock that's consolidating at support and it's poking up and making a higher low, I'm going to get in. Without thinking of the bigger picture of like, well, we haven't really seen day ones turn into day two moves. We haven't seen really things push into the close. So why would I be focusing on something on a pattern that's not in play? And going forward, that's all I want to focus on, right? Even if there's a lot of plays going on, I just want to focus on what is in play right now. So simply looking at the percent gainers and seeing, okay, what were these percent gainers and where did they come from and what's their pattern? I'm going to try to catch the next one. And not just play like, oh, I like afternoon pushes, so I see a stock falling to support and consolidating and it's making a higher low. That means I'm going to get in because I like it. Well, it's not really in play, right? So that's in my opinion, why I lost SRM and something that I could remove. Which then led me to my loss of ALBT, which I bought here on these two 10-minute candles. It made a low at 441, and then it started spiking here. You can see with this wick here. So I kind of got in, and then it just started failing. And with this one, the reason why I bought it was because we've been seeing stocks go from 2 to 8 last week. That was the theme last week. 2 to 8, 2 to 10, whatever. We saw them go to 2 to 8 in pre-market. They'll bounce, they'll reverse, and they went back to highs. Now, this one didn't work in my opinion because it was a failure. And that was something I talked about last month that I didn't really want to do. So I'm a little upset from that mindset, but I'm not upset because the pattern was in play. And I think this was a sign that the pattern was over. That was kind of another reason, right? It barely touched 7. Barely touched 7. And then it just kind of dumped from the open. And if it was going to reverse, it would have been around the 5 area, like Roland, or maybe the 6 area, like RKDA. But this one just kind of faded, and then like, you know, I'm playing it around 440, and you know, sometimes a fader is just a fader, right? And I think the fact that it barely touched 7 was the first red flag, and then, you know, I was kind of thinking over the weekend, like, how would you define a fader, right? How would you define a fader? I would define a fader as something that's overextended in pre-market, 2 to 7, and just kind of dumps right at the open, right? And is slow price action. I can't show that here, right? But you can just feel the price action of a fader. It's slower. You just feel that there's no juice around it. There's no excitement around it. And that's kind of what this was. But I wanted to take a stab at it because the pattern was in play. Maybe this one was just a little different. It was going to just fade a little bit more, whatever. But ultimately, as you see, it didn't work. And I still feel better about this trade than SRM. Because at least, and like I explained this in my last videos too, at least with ALBT, I could sit here and say, well, I was trying to play something that was in play. And I was playing at lows, and it essentially made a double bottom with 2 lows here on 2 10-minute candles. And I was playing something that was in play. Whereas SRM, I can't even say that. I can't even say it was in play. I'm just playing a random stock that happened to make a higher low, right? So I think that the pattern in play is just so important, so important. But this is kind of the nail in the coffin for me with faders. Hopefully, it takes me a long time. For some reason, I have to get burned on something more times than I should in order for something to stick. And I'm hoping this fader is the nail in the coffin for me with faders. Like, look, I traded at 1030. That's way too, in 1040. 1030 is and I might even cut that back. Like anything beyond like 1015 is like a fader to me at this point. Or if it's like super far away from pre-market highs, like over 35% from pre-market highs, that's like a fader. And you know, another thing I kind of noticed psychologically with this trade, like I have a lot of trades where I'm kind of like 50-50 on, where it's like, okay, there's some good, there's some bad. I don't really know if it's going to work. I have to stop taking those trades too, because in the long, essentially buying a fader and buying a ticker where I'm like, maybe I'm essentially being Billy, just on the other end, right? Like I'm trying to pick the low, and I'm on, and I'm hoping this fader reverses, and it's kind of 50-50 if it will or not. Like that's exactly what Billy is, just on the other end. So buying a faders and trying to pick the low is just me being Billy, essentially. And in the long run, if I'm just going to trade tickers where I'm like, I could go either way, like I'm going to lose. And essentially that's what faders are. So most of the time, faders don't really reverse. So hoping this is the nail in the coffin for me with faders. However, so that was my third trade. And then my fourth trade could have been my biggest trade ever, and my best trade. Best trade from like an identifying, and then obviously best trade percent-wise. I got in on ADD for a reverse split play. We saw a bunch of reverse split plays last week, specifically low floats in the healthcare sector that dropped compliance news. They dropped a PR saying they regained compliance, and then they split. SLXN, PBM, BDJX, ADD, UPC, and maybe a couple others. But this one just hit absolutely to a T. In the same price range too, around the 250 to 350 area. So ADD 250 to 350 area drops a PR, regain compliance. I bought really bad entry at the close of this spike on the 10-minute candle, around 420, and I knew that it was very possible that this spike ended at 5 a.m. Like I knew that was very possible, but I was kind of hoping that at 7, when I could trade, I would just get like some gains back, and unfortunately not. Like I could have sold right here at 520 for $1 a share gain, but I was just like, okay, maybe this like gets back to VWAP. At this point, I was just kind of like, I didn't care because I lost all the gains anyway. But if I had a broker, and I would have woke up at 4 a.m. and I would have sold this for over 100% gain. So it sucks, but I'm really glad that I had this because this was an amazing trade. I mean, there's no two ways about it. Like all the stars aligned, I got in, and we had 100% gapper. I observed the pattern, I observed the trend. One of the tickers did exactly what it was, and it worked. I just didn't have the broker, right? So whatever, that's fine. So those are my 4 trades, and my big takeaways from the week were entry is everything. We've talked about this before. Entry is absolutely everything. And for me, I'm going to switch time frames from the 1-minute chart and the 3-minute chart to longer time frames, 5, 10, and 15 minutes, because I just feel like the 1-minute chart is super fakey, and I want to weed out all the BS. And from my few examples of looking over the weekend, I feel like I could get very similar entries on a lot of these plays with way more conviction. The next, and then really the only other thing was pattern and play. 2 other things, pattern and play. I feel like the pattern being in play almost trumps everything else. And I'm only going to focus on things that are in play at all times. I'm not going to play anything that's not in play right now. I don't care if it's the first one and it's a massive runner, I'll catch the next one. Right? So I think that will help me avoid just trading things, random things that are moving. I could almost argue like if something's moving and it's not part of the pattern that's in play right now, it's just kind of random. And I do not want to be playing anything random right now. The last thing is faders. As I talked about, I'm not buying faders anymore. It's essentially buying a fader is essentially being Billy on the other end. And a fader to me is something that's overextended pre-market, that dumps right from the open, that has slow price action with minimal bouncing, and something that doesn't do anything until 10:30. And I'm not going to trade anything beyond really 10:15. That's kind of my cutoff right now. Until we see a theme of like, okay, stocks are fading till 10:30 and they're reversing, which I just don't think. I feel like I have seen that before, but it's very short-lived and not really a pattern that I find is a good one. I think, again, it still falls under the category of like, yeah, it could kind of work sometimes, like Billy, right? So I'm not going to do that. So those are my big takeaways of the week. And leading to today, we saw all of those themes really change. We're not really seeing 2 to 8 this morning. We're not really seeing reverse splits this morning. The biggest percent gainer on the day is LDTC, which I'll switch to the 5-minute chart. Even the 10-minute chart, you could have bought up here, but that's crazy. If you caught the PR right at 7:30 and then bought like here, and that is a pattern that I like, but I don't get in front of my computer until 8. And it's tough. You never know. Like, these things could just spike and fail, but it is a good play. Obviously, the volume is massive. So we're seeing 30-cent stock to 2. Also, LDTC doesn't look good on dilution tracker, so I had really no interest. Rhyme doesn't look good on dilution tracker, and I don't really know what this is. I didn't even look at the news, so I don't care. The only theme I kind of see this morning is Chinese tickers. We have UOKA with a nice reversal, no news. And then Duo with this really nice 1 to 150. I mean, that's a substantial, significant gain. I saw that China policymakers are saying they would possibly accept a loose monetary policy, so all Chinese tickers are kind of moving. So that's really the only theme I have. We had ASST, a nice reversal, but there was volume resistance on the daily for me. Well, not anymore. It's blowing past that now with the big volume, but there was volume resistance. There's no news. Maybe price range around this 30-cent mark. GXAI seems to be, I was curious about this as a day two. And it looks like we're seeing a push to high a day here, which is awesome. But I just wasn't sure if this was going to continue because we have seen, I should reiterate, we have been seeing multi-day runs within the quantum sector and the AI sector. So I guess with that being said, this isn't a terrible idea, but I don't know. I don't know. I'm still on the fence about sector momentum. I haven't really traded it, and there is a lot of overhead supply on GXAI, so just wasn't really too interested in this yet. But I'm looking at some other AI tickers, and I don't know what SON is, Fader. So not really much going on, and not really too many themes, in my opinion, other than Chinese tickers, which not really a price range, and AI and quantum. I mean, that's really all I'm seeing today. I mean, I don't even really see like incredible morning gap and crap reversals that I'm super confident about. So yeah, that's all I see. And then as far as looking at Chinese tickers, I just really hate them. But if we see like massive closes from these two, Duo and UOKA, then I'll definitely have to be interested. I was looking at, oh, and this one popped to TIGR. I was looking at SXTC, but it's a fader, and I want to buy this so bad, because it looks good on dilution tracker. I mean, it's running for whatever reason, it's running. It is at support, but it's like I'm not buying a fader, and I want to reiterate, I'm not going to buy faders unless they close strong. That's the only exception. So yeah, I mean that's all I see today. I did compile a list of like my favorite AI and quantum tickers, just based on dilution tracker and ones that have been running. I think this is ripping. Yeah. So we're seeing a really nice move with GXAI, which shows me I definitely need to hop on this wave here. And You know, I almost bought it here. See, I was using the 10-minute chart though. I almost bought it here, but I just wasn't sure. There's a lot of overhead supply. We have seen movers, but I haven't really been studying them within the sector. And, you know, I would have got stopped out anyway if I had bought this. So I think maybe here might have been the nice play, but again, 1030, I don't know. But something to keep in mind. Curious to see how this closes. And that's it.